in today's drill down. So Trulia going for it.
Yeah, so later is today when it comes to the Trulia IPO. And you mentioned $100 billion, so important. We talk about Facebook at the beginning of the segment. Facebook doing $1 billion in quarterly revenues, right? This is a much smaller business. It's small, but it's growing. The Trulia revenue story is, when you get a sense of what the size of the revenues are, well, the company's, doing about $7 million in revenues 18 months ago. That's grown in the most recent quarter to $17 billion. So you can see some kind of steady growth there from a revenue basis. I think what you see that big jump in the most recent quarter, look at the year-over-year revenue growth for this company in percentages. Now, we like to look at year-over-year because, of course, the real estate business is a very seasonal business. But this is a company that's really seeing a lot of growth from a small basis, but interesting growth at that.
Yet, along with a lot of other internet companies out there, the sort of bane of their existence right now is mobile, and a lot more users accessing sites through their mobile devices. How is Trulia doing at monetizing?
Right. Well, we know about Facebook and Zynga's troubles with mobile, and I saw this line in the Wall Street Journal suggesting the bane of existence for these new companies is mobile. But in fact, this company's doing very well in mobile. Their traffic from mobile rose significantly this year as a percentage of their traffic, not just through their growth. What happens is people going out looking for houses, fire up their iPad, fire up their phone, using location-based services. They're shown homes in this area, in the area they're looking, in their price range, and it shows them ads from realtors in that area. So you've got highly motivated, likely buyers, qualified leads, the blue cards from Glengarry Glen Ross. So their business has two portions, I should say, percentages of revenue coming from two different areas. One is marketplace, one is advertising, so what they call media. So the marketplace business is growing and growing fast, and that is the largest portion of their revenues at this point.
Now, this is one of the first companies we've seen actually use the Jobs Act, right, to go public confidentially. How does that manifest itself here? So
what's interesting is they've been able to go file their paperwork with the SEC, see if the SEC had any problems. Whatever Q&A there might have been between the SEC and Trulia has not been out in the open yet. It will come out later. Remember with Groupon, when there were so many questions about the accounting, for example, that back and forth was between the SEC and Groupon, eventually became public before the IPO. The difference was people like you and I, people like the analysts out there, could also, and the public could also notice the early filings and say, wait a minute. And they had a lengthy period of time to do so. Companies complained about this. Investment banks complained about this. So the Trulia Roadshow is only a few weeks away. Trulia could be public if there's an appetite for this thing in just a couple of weeks. This new law has made it possible for companies like Trulia to get out the door quickly. For good companies, and in my cursory look at the Trulia financials, and things looked fine, clean to me, clean accounting and so on, that's a good thing. But when bad companies are able to use this, they're going to be able to sneak out, I think, a lot faster without the same kind of scrutiny that other companies have had in the past.
Well, and it'll be interesting to see if the Jobs Act sort of dampens all of that enthusiasm that you normally see in the run-up to an IPO, which can, of course, sometimes boost, how the stock comes out of the gate. Definitely sort of two sides of
the question, the law isn't for good behaviors, right? The law is for the worst of behaviors and to protect us from the fringes of human behavior. This law is going to open things up for both good and bad.